might be really, attainable. Today, the number was almost matching. It was pretty crazy. So the method you use to get to it, and for those who weren't streaming, I was referring to this document, which Moki put into a slideshow for us. So as you follow along in the slideshow, you can also see these documents that we have been using for a while. So we're going for the end of day close values using a wave 1 daily 200 acyclic and a data warehouse query, which will give us some good value. When I was referring to the part about the wick and the no shadow and it pushing past an open line, ideally, in this case, it's showing a put, it's showing a red candle. We want to go beyond the target. So you want to try to look for something that's going to give you a safety net and not say, okay, well, this could be a 514 down here on my open line, then get a 513 put. You're going to be safer further away. You'll end up in a overshoot situation. That's ideal. We don't always get to do that, but that's where you would be making your trade decisions as far as that goes. I'm just going to go through the process. I think it will make more sense. So you pull up your wave 1 daily, well, after open, and I usually slide this bottom thing to make it nice and big. I do have the hotkey set to refresh every minute, so it's probably going to do that while I'm talking. You're going to look for your current candle, which is right here. Just by hovering over it, you can see that we're populating information in the information window. We can see that it's red. And this is helpful if you have a doji candle or a little dragonfly candle where you can't even tell what color it is. You can always tell what color it is by seeing this value here. It's going to be red or green. See how that one turns green? That one's red. Today, ours changed a couple times. The other thing I do is I stretch this out to see if there's a wick. In this case, you got to go kind of far to see that wick. So that would be the low, and if you hang on to your cursor, you can see it populate over here, the little blue number. But if you just hover anywhere on this candle, anywhere in this vertical space, it's going to give you the information you need over here in this information window. If you, somebody had asked the other day what happens, if you go to look at another candle, you can look at another candle's level the same day, but you have to stay in the same vertical plane. Just want to make sure you keep this really straight. So wave 1 dailies are really helpful for that too, because they're big and they're easy to hover on. Once you start moving to other candles, you'll see the information in the window change. So we've got our wave 1 daily candle. We know that it's red. We know that it's below pivot. It has a wick and it has a shadow. So using our formula, cheat sheet, we know that we're going to look for the low of day, open the data warehouse, and run the query, find out what this adjustment is to figure out if we can figure out the close. So one thing that I learned this week with the hotkeys is that as soon as you start moving your cursor around, these values change. If you want to lock it in, if you have a hotkey for data warehouse, which my alt, oops. Okay, I did it. Oops, sorry. So you hover on your candle. Then you're going to open your data warehouse by using your hotkey. So what that does is it locks it in for you. Now you can move your mouse all over the place and your values won't change. I was always having to write these values down. And then for ease of use, pull these down, make it a little easier to get to. Anytime you're loading a query, you can right-click it if you like and hit load. And whoops. Oh, oh wait, there it is. Normally, it will populate in the SQL window. I'm not exactly sure why it didn't do that for me. So we're going to use the average close above low red days, like we saw here. And today was Wednesday. So we had 234. I always write it down. So when I checked it at 2 o'clock, it was 236. A lot happened between 2 o'clock and 4 o'clock today. So there can be little fractions of a cent of adjustments. They can add up, but from what Russell was explaining, it's not usually significant enough to make you change your plan. So we get 234 here. We're just going to take the low of day. Yeah, 518.40. And we're going to add, because we're looking for whatever this pullback is on this candle, the 236, and we get 520.76. So 520.76, that's a pretty specific number. If you're looking at your chart, that's telling you that you're going to close below the ceiling, which usually we close below the ceiling. Your PML, it's below PML. It's not quite to the floor. So you kind of are starting to get an idea of the range of where we might close for the day. You can also see with 520, let me go ahead and close this now. 520.76, I meant right. 76. Well, I guess it would be right there on a daily. What is going on with my stuff? This is really, really close. So that's why. Okay, so I'm stretching it out and you can see that the candle's actually above pivot and the 520.76 is way up here. Our actual close ended up being 518.91, but we had just pushed a new low of day at that point and had a huge move. So in today's case, I would say that it didn't necessarily match up as good as we like. So 518.91 and 520.76. We're about $1.85 off. Yesterday, we were only 79 cents off. Our range was tight. Our values were close. Everything fit in really good, and we were only about 70 cents off. But again, it gives you a zone. So for something that ranged from the low and the high, $5.28 for the whole day. Can you guys help me? Is that right? So,
That's pretty close from open to close on the previous, correct?
yeah, that seems kind of strange. Okay. That's the steps. That's how you do it. I have some examples, and I think that makes it make a little more sense. So, can you guys see this okay? So, this was May 22nd. There's our candle. We had a wick. We knew we were green. We took the high. We took our number out of the data warehouse. We subtract it when it's high because we're looking for the pull back from the wick. And we got 516.24. We closed at 516.51. So this is a pretty cool this was a pretty cool one where it worked out really well. I think when you ask yourself like how can I make this actionable, the thing about the targets is 516.24. We were pretty close to the ceiling. If your ceiling is going to be 517.54 with a margin, 516.24 is really close to that. you're expecting rejection, but you're still coming in above PML. So even if you had come down to PML and pull back, which I wonder if we saw a linear chart, that might be what happened that day. But these numbers and these values are really close to help you decide where we might end up at the end of the day. The days like this where there's a big, huge candle, it's really helped me know, okay, we're going to be in the middle or we're going to be near the bottom. So that makes it more uh, safer for you to either stay in your trade longer or get out of your trade or just sit on your hand. One of the things that Russell mentioned too is that when you do have puts and you're using red candles, the best one is a solid red candle because you're going to get the maximum upside at the close. If that thing's just pushing and pushing and pushing down into the close, that's like an ideal situation. And for some reason, puts tend to move faster and go farther than calls. Sometimes calls and gains are like a slow grind, whereas we see those jackknife or those washouts on a put or a red candle. So this is another good thing to look at the end of the day. Um, if your broker is going to close you out at 3:30 or 3:45 p.m., like Robinhood, Webull, some of the others, even Schwab will do it to you if you don't send a note for the day. You can buy a 1 DTE, something for expiration the next day. You'll be able to trade that all the way up until 4:15. I think a bunch of us were doing that today, and they're going to talk about that in the recap later with the buying stuff for the next day. Let's see. So, one of the things that we were talking about with some of the newer people is just getting used to using your Wave 1 daily chart in general. Whenever you're using a Wave 1 daily, there's a lot of information here. You've got your open states, but you got these little values next to them. That's the number of aggregations that that state has been open. So the number sign is going to show the aggregations for that open state. The current top high a day is being shown here at the dotted line. Each new high a day that pulls back creates a new open state. And then that gets a new aggregation. So like you can tell this one's only one aggregation old. This one's been around for 12 aggregations, which on a daily, that's 12 days. When we see these higher numbers, it's not that they're more significant. It's just that they've been around longer and they can be more resistive. Let's see. That was just a quick review on daily. And then the other thing we have in the sheet, and I'm sorry, this is blurry. It's not blurry in the document. You can use your end of day values to help you decide your bias for later in the day or the next day by coupling it with the high and low values in the option analyzer. And without getting into like the whole yellow box and all of the odds and all of the data, there was a big question when we posted this picture. I think it was George was asking, where did we get this 96%? Well, the 96% was that particular day, and this again was April 1st that we were talking about. There was a 96% chance of an H1, and I was able to find the message where we were talking about it. And Russell was explaining, from the option analyzer, if we have a 4% odds for an L5, then 100% minus 4% is 96. So by default, we have a 96%, sorry, 96% chance for an H1. So we were kind of running with those numbers that particular day too. And even though this histogram can be used for lots of things, intraday and next day and things, it's really important to get familiar with this when you're using your Wave 1 daily as well. I believe we can use it with the 1015. I've never done it. And then just to explain this little chart is how we were doing it by pulling the daily range, adding up all these values, and then taking an average. And now life is a lot easier because there's a new query in the data warehouse that lets us just do it. So instead of having to line everything up like that, it's much easier. And then where are these numbers coming from? Literally, if you were to go back and check all of these lows and highs, all these values, the averages are just going far back. I'm not sure exactly how far back they go, but I'm guessing on a wave 1, 200, they're going back 200 days. The other thing that's interesting, just with a simple picture of trying to find all your, 2H's or 1H's, is that these are there's your L, there's your H. It literally is the next one back. It's pretty cool when you just start playing around with these charts and you can just see how much information is compiled in there. It's overwhelming at first when you're trying to learn it all at once. But I think this.
What should we do if we're missing that query in our data warehouse?
The query has been included in the PDF that we're giving out tonight. The well, yeah, hang on just a second, and I'll get to it. This was another part where we were using the histograms to figure out what was going to happen tomorrow. So, again, that goes with the positioning at the end of the day. And Russell said he was going to, give a overview on that. We do it every day in chat, but I think it would be more meaningful if people could ask questions and really nail it down because it's a really valuable tool. It's one of the most valuable tools we have. So the query is, bear with me. You guys see that? You're going to get these queries at the end. They're going to post it in the UAT channel. I have a little document. Let's see if there was anything else on my end. Yeah. So no one else is talking. This is supposed to be like a steady group. So I do think that, can you guys still hear me? Hello?
Yes.
Yeah, I can hear you.
Okay.
I think
Sorry.
everybody can.
So Milk created the channel for us in the UAT group about a month ago, I want to say, and he said, "You guys just use it." And then Ryder, I think, was like, "Yeah, we should all use it," but it was a holiday weekend, so we never really all picked up on it. So this hopefully will be the first of many study sessions, and they don't all have to be formal. That channel's in there for us to use. And so if you have an idea, just let those guys know and they'll set it up. If it's something formal, you want to do a presentation, or if it's just the end of the day recap where we can go over our trades and the climate that we're dealing with and things we should be looking for. And of course, questions and answers. It's really easy to screen share in there with people. So all of that said, I'm either turning over the floor to Russell to explain the histogram thing, how we can arrive at that for the following day, or if Biggin wants to start with a recap.
Yeah, I just wanted to pipe in real quick.
Yeah.
That additional UAT channel, that voice channel, is absolutely for you guys to do anything. So use that as study sessions, like if you're doing prep for the next day, like if you guys want to go over whatever setups you guys are looking at, what data sets. If you guys want to actually use a study session for each other, like if someone doesn't understand something and you want to show them, I mean, we kind of want to build on that a little bit. So it's like a full tool for you guys. You guys can do review sessions, prep sessions, like Sunday night evenings, looking for the following week range, looking for the next day, Q&A. That channel is totally open to you guys. So feel free to utilize that whenever.
You did a very good job explaining that.
Thank you.
Explaining stuff. Kind of complicated things we do. But so on our wave one, what it's doing is just tracking the movements up and down the cycles. And these stats, very basic stats, mathematical stats, are basically just tracking what's going above the pivot and below the pivot. And it's like the Galton board that we use to illustrate this. We have the center, and then there's so much distribution to the left, so much distribution to the right, so much distribution long, so much distribution short, and it just cycles on and on and on. So these values, I think probably most already know, they're based on the pivot. So an H1 is the first, and it's time. This is time-based. What user 321 showing? That's a time-based look at it. So H1 is one aggregation, H2 is 2, H3 is 3. And since it's wave one daily, it means it's one session, second session, third session, fourth session, fifth session, etc. And I can't stress enough, they're mathematical. So it doesn't mean if we're like in L3, it can't go L4. It can. It's just showing us how often that happens. So it doesn't happen often. So if you take like at the end of the day, what this is telling us is at the end of the day, overnight volatility really, because the transitions typically are occurring overnight. So if we're in L1 and we get an H1 the next day, usually there's some overnight volatility that's moving us long. So it's showing that discrepancy, that variance. So when looking for, and today is a classic example of this, when looking for, say an H1, as we close, and today you can see what happened. User 321 is mentioning how we're computing the downside, and there was some variance in it. It kind of washed out a little bit more than expected. But if looking at our values, L1 to H1, if trying an overnight trade, you would put it on around the close, around the 4 p.m. time or the next day. You can see right now how potent that is. I mean, the high right now is 528.62. So in QQQ Live today, I was showing the open line, the W7 daily, 528.34, and we've acquired that line right now. To close it, we have to be in the RTH, so we have to be 930 to 4 to close that line. We've acquired it, we've hit it, but we have to be up there tomorrow. We have to be at that or above. So taking that, just going by odds only, taking L1 to H1 and using those open lines, you can find all strikes that can be leveraged. So you can look at that. I drew the two arrows up because, the bias, the overall bias in the market's long. It doesn't feel like it. It seems like Main Street keeps thinking it's going to implode, but it's long. So with that premise, with that idea, using the strikes up there, you can put on trades overnight if wanting to take a swing at it. So again, they're mathematical, just a roadmap. They can fail, so you have to keep that in mind if it fails. Our trade, our NASDAQ composite, it's trying to close that line up above in the wave 20. And Big Gun and I did a video, I think over the weekend it was, we put it in the UAT, that the bias of the market's overall long still. And until that changes, it's long. So overall, we're looking for entries on the long side. And not necessarily, I mean, the short side's fine. Like today, we had signals for the short side, but overall, the market's trying to move long. And here's the 321. She's showing the open state. Can you open 1,000 days on that one? On the IC wave 20 day? Okay. Yeah. So what we're looking at is trying to close that open line up there. On the 1,000 days, you can see we still have a gap, a spread there. So maybe tomorrow it closes, I'm not sure, but until this vector starts intersecting and until we get below this vector, I'm anticipating bounces. So we had, a spread between the vector and the price action, and then it zoomed up, kind of anticipated that it might do that. And it's trying to, we're still trying to maintain long. After, if we can close that open line, then the market's going to make a decision. Is it going to have a reversion? Do we close and go down? Or do we close, consolidates, and then it tries to knock out those open lines above? So the standard deviation down below, it's falling, which is fine. It can fall and the market can still go up. It just won't be as potent of a rally. It can be a little more subdued rally. But if you look on the left, we have situations where the standard deviation was falling, but the market kept continuing to rally. And then it was just, it gets to a point it slows down a little bit. It doesn't have as much velocity behind it. By now we had a lot of velocity after hours, but it can get a little bit more sluggish. You can see like already, I mean, over 19 trading days, we've already acquired what took 68 trading days the last time around. So clearly institutions are looking at this and they're like, not wanting to fiddle around and just go kind of straight up there, because they have a reference on the left-hand side. Just like us, we have a reference on the left-hand side, so we can see where we are trying to seek out. So again, once we get, if we can close, see if we can maybe close tomorrow. Tomorrow's Thursday, maybe Thursday, Friday. See, then we'll have to go from there. At a certain point, we're going to have to anticipate that we're going to test the purple again. So there'll be some more short-term shorting opportunities coming up here. Maybe right after we close that line. Not sure. But we'll probably kind of round. There tends to be a rounding of the tops a little bit. So some kind of consolidation, some choppy, and then it kind of starts rounding off. So I'm gonna have to keep an eye on that.
In the spirit of like this being a Q&A, this one has a 1 aggregation and this one has 111 aggregation. So we're about to catch up with something we were doing 111 days ago. And all of this resistance, this makes it to me more resistive than just a one-time aggregation. Does that make sense? Like if we
Yeah.
posted that yesterday, it might be easier to bust through than something that's been sitting there for 111 days. But then
That's
look at all this white
absolutely
space.
that's absolutely right. It could we could get up there, and because we've got 2 known closes on our left, we've got these 2 prior caps. This time around, buyers could mean business, and they could knock through that. Yeah, because we've got these 2 over here on the left. So it could give a false sense of security that, oh, there's a good short there. And it may not be. It may be just a long continuation. It might try to, if there's enough buyers. I noticed the Supreme Court was doing something with Trump, the tariffs, right? So maybe there's some more incoming stuff that's bullish in nature. It's out there, and you could run to the top. Now, what's interesting is NVIDIA, if you look at it, I think we're 5% after hours. And the market has not moved up 5%. So NVIDIA is running about a 2 to 1, I guess, right now, or maybe even more than that. So the beta is really high on NVIDIA. Like for every point acquired in the market, it goes up even more. So, I'd like to see NVIDIA close out this line we're looking at, the 140.60. And then we've got a 176 up there next. And, I get DMs and stuff, and I know, people are looking to make a killing off this trade. People are looking to make 500,000, $1 million off this trade. I get it. So, probably going a little more heavy than they should. And it's all up, to bring in the money like that. It's all up to NVIDIA in the market. We've got to have like a really clear path to victory. There can't be this thing cannot mess around at all to get there by July 18th. So,
And Russell's referencing the wave 20 on the video.
yeah,
Okay.
wave 20. Wave 20.
Mine resets every minute, so
Oh yeah.
I time
got
it with you talking.
Yeah, I got it. Yeah, so it's like we'll see. We got to first close this. We got to be up here tomorrow. In our regular session. And once we close out, we're gonna have to see get enough buyers. I would venture to say, I mean, people are thinking NVIDIA is a $5 trillion company, right? So, but if that's true, and when that comes about, who knows? Ideally, it's in the scope of our trade. It's in the scope of our long trade that occurs. And what's interesting is when these things do unfold, like, we get to, maybe we get to 176, we don't know, but maybe we do. Maybe we get to the 212. The 212 is the holy grail. That gives us a $32 call or plus, even more than 32, if we can hit that by July 18th. So when that event does happen, we're seeing the possibility of it because the unique way we can capture data points and build up data points. So we see the possibility of it. And if it does and happen by July 18th, everybody's going to be like, oh my God, I don't know where that came from, probably, right? Be all over the news, it's NVIDIA's gone crazy, and it's just massive upside. And, we're sitting here and, waiting for that potential, that possibility. So sometimes I've done these over the years, many years. Sometimes they come in, they happen. Sometimes they don't. The main thing is, if you're going really heavy, I know some people are, just, don't lose all your money in the trade if it goes bad. If something comes out of left field, well, I would caution, because when these trades work, they're great, make tens of thousands, hundreds of thousands plus, $1 million or whatever. And when they work, they're great. It's fun. When they don't, and you put too much money in them overweight, it sucks. It's not fun. So we'll see. I'm still skeptical on it. It's possible. I'm a little hesitant. We'll see if we can move up, if the ceiling can revise up, if we've got more open territory if we can cover that. So a good thing is the macro went green down below. It's a learning logarithm, kind of goes green and red. So that's good. I mean, it looks all right. The trade to me looks a little aggressive because of where it came off of at the bottom, but it is what it is. It started moving. We identified that. People could get in at that 30, 40 range that day we started coming up, but we'll have to see. Even now, if we hit 32 now at $1 or whatever, it would look cheap. So to see what we get.
Begin,
So-
did you have any of the Periscope plays that you're looking at for tomorrow in regards to like what we just witnessed today?
Mainly kind of the focus is, those like, high market cap, high liquidity, like persistently high liquidity plays. So that, a lot of that kind of falls into like the tech basket, which, is probably going to see like an overweighted effect from, this evening's news if there's no pushback or something to it. We haven't seen a response from Trump to the ruling by the U.S. Trade Court, but yet to come. But I will say that, like, I guess those should be, outperformers. I think we had some on our list, like Apple, and I forget the rest of the ones that we had, but I know that was at least one of them that was on there that looked really solid. Costco as well. That one came up as a very like strong, like basically, I'm looking at the stats for Costco mixed signals, and kind of like the range of its BTO and its target percentage are kind of like optimal for the entire symbol. So this kind of like the cream of the crop trade for that symbol specifically. I think it was like that 140 or 1040 call. Um, yeah, those are kind of, as we discussed in our last meeting, you can kind of just have like a consistent like basket of about 10 to 15 of the highest liquidity stocks, and you'll generally see those just perform well. And in periods where, we have like I guess in for the long side or the short side, really, they kind of have like an overweight effect um, to the underlying market, or higher beta, as Russell was talking about earlier. So definitely, I guess, outperforming, maybe some of the, lesser traded, lower liquidity stocks that aren't really like an investor's or speculator's frenzy, I guess. Hopefully that makes sense. Yeah, we have our NVIDIA trade. This call right here, actually, if you see uh, that like kind of all this week, this 132 call in our ceiling, right? Our 142 ceiling, that's our I guess over the weekly ceiling. You can check kind of where we are after hours. We shot up right to that 142, and within the help section, there's kind of a small part that talks about like gravitation of the stock towards your average strike call or average strike put, resulting from earnings events, and that's kind of like basically a textbook what occurred for NVIDIA post market.
Is there a reason why you and Russell are using these wave 20s lately compared to we're usually looking at 1s and 7s?
Um, so I would say, at least for Russell's NVIDIA trade, if you pull up the 1,000 day on it, it kind of gives you like the clearest view of, what we would call like that fractal trend line development that you see kind of pushing into the pivot. Like that's a very sharp view. I think the number, like 20, it's kind of like arbitrary in a way, like the same way like your TV volume setting. It's really about tuning like the graph to like the frequency of the individual stock. So, you can be looking at like a wave 13 or something, and people, I've seen people trying to avoid like non-even numbers and stuff like that, but it really is kind of arbitrary in that way. Like you shouldn't necessarily restrict yourself to only, being able to look at graphs with, 1, 5, or 10 multiple. So, but you can see that wave 20 right there. Like that's like a pristine fractal trend line on Russell's setup right there. And the wave 20 on the NASDAQ composite as well has like some pristine setup.
We had talked about part of the agenda tonight being, the weather report, what we saw today, what we're looking at, the forecast, Periscope plays, member plays, things we're watching, just kind of current events type thing that's affecting everything. Milk, you're here too. So do you have any, opinions on what might happen tonight going into tomorrow?
Yeah, definitely. I mean, I watched the NVIDIA, earnings report, read through that, and then also watched and listened to the NVIDIA earnings call. Much of it is kind of like a reiteration of what they just put out on their conference call they did like last week. They're putting out more infrastructure to build more systems to supply more chips. So I see their next Q being like highly potential, probably end of year. Like their market cap I'm gonna say is gonna be, closer to 3T. And I do kind of speculate. I don't like to speculate, but like we're looking at the Wave 20 daily, that 212 target for the end of the year. I think that's kind of realistic, depending on news with Trump and everything. Trump put out that news today where he's put more restrictions on chip development software and sharing that with third-party nations such as China. And if you guys had a chance to listen to the earnings call this afternoon, that was kind of the big stipulation. They couldn't dumb down some of their chips to meet those requirements that Trump put out. So that's where they had that like $5.5 billion write-off on those chips that they had initially built for China. So, what we see going forward, it's pretty massive. A lot of people have called for an AI bubble. I don't think we're near that quite yet. We've seen a hint of that earlier this year with the Hawaii stuff and the China infrastructure. Do I think we're missing out on some market cap or market exposure to China? Yes. But the bigger business model, I do see that. So some short-term pains potentially on, sales revenue. Their profit margins have shrank a little bit due to that result. But I think we're going to see a big shift in the U.S. market. So when we see that new Stargate facility being built in Austin, which I think is to be completed, I want to say in June, July, when we see that completed, and they start rolling out these new independent AI servers where companies like Microsoft, everybody can build their independent AI servers in-house. It's a vast business model, and they've architected it very well. The question and being before on the dip of NVIDIA's market cap was, the question of the whole business model of competitors outside, and that's been kind of squashed. Like they can build chips and stuff that can kind of compete, but not to the same level. They're still going to be underperforming compared to what NVIDIA is putting out there and the business model they're putting out there. And NVIDIA is not being greedy. That's the other component. They're building a bigger business model. It's not like, hey, you can only get NVIDIA chips. You can only build and buy what we sell. They're saying, hey, we're offering a marketplace where we want you to buy our stuff. But if you don't, we just want you to at least buy something. So they're building this whole marketplace that's, it's probably going to be like a bigger term 5-year model that's going to pay off even more. But NVIDIA is going to absolutely dominate the market. They're like the second market cap right now. I think Microsoft's #1 market cap in the world currently. I do see them surpassing Microsoft pretty easily here in the next 6 months, a year. So, and that weighted on the S&P, the NASDAQ. I mean, if you look at it basket weighted, I don't know how familiar most of you guys are, but any ETF market, is compiled of, a certain number of tickers, like the S&P 500 most performing tickers in the world. Well, we have the 10 most performing tickers. NVIDIA is obviously number 2. We have Microsoft, the Mag 7s. Usually you want to watch kind of the top 10. This is something to put on your watch list, like a day-to-day, like if the top 10's performing. You don't want to like counter trend against them, so to speak. If we get a pullback, you're like, hey, is the top 10 performing? Obviously, there's shifts in the market into sectors at times. If we move out of big tech into healthcare, financials, other things, we can see some shifts temporarily. But whoever carries the biggest market cap is generally who carries the market. So always be very aware of that. Know what you're trading. If you're trading the Qs, you're trading SPX, you're trading futures on the NASDAQ, the S&P, who's performing? If you're looking for a version trade, if 10 of that top basket is carrying the market, you can call it a pullback versus looking for a full reversion. And you can trade that two ways. If you're taking like a short scalp, on a reversion, to capitalize on shorter gains versus holding for longer gains. But I do see NVIDIA continue to carry. They're going to have some limitations federally, like what Trump just put out with what I was just discussing on the restrictions of software to develop AI chip infrastructure outside of the US, specifically to China. So we're going to see some relations as to that. But just keep an eye on it. Any questions?
Everyone's being really shy. Ryder has questions. We saw them in chat.
They are. Don't
He
be
wants
shy.
to know why the SPX is not working on the OMM right now. It's probably just a technical thing.
Well, it's not necessarily technical. Russell can speak on that more. SPX has a little more work. It's being worked on currently. SPX will be part of the OMM sooner than later, but it takes time we had to like re-architecture the whole system. Russell's put in the last 4 months rebuilding quite a few things to compile with the new data sets and the new servers and everything. So it's an immense amount of work, but SPX is pretty close on the list. But for now, using SPY as a comparative basket to weigh the derivatives market does work pretty well. So you can cross convert it, find the fair market value, and then convert SPY into SPX or ES. And as you see, if you follow my charts every day, it works out pretty well.
I just wait for Milk to post it and then I use it. I'm like lazy. I'm like, hopefully I'll post it pretty soon.
Oh, we complement each other. Like you run the NASDAQ. I typically run the S&P, and there's no reason to like do twice the work.
No, and then it just shows how to use the system in different ways, right? How to use different tools.
Yeah, it's pretty phenomenal. I remember going back with you, Russell, like 3 years ago, like in the option analyzer function on, looking at the H2s, H3s, and the stats. Like when you built that out, it was just like an aha moment. That was pretty cool.
Yeah. That really helps to quantify the data up.
And that's what it's all about. I mean, we have tons and tons and tons of data, but turning it into quantitative, or some people call it quant, so to speak, even though I'm going to say that's not the best terminology, but quantitative, taking data, turning into a fashion that you can read and derive information from into stats, probabilities. That's what it's all about, reading data, knowing your probabilities, reading the narrative over and over again. It's not about being right 100% of the time, even though everybody loves to, right? Even I do. But, I'll take 80, 90% probability all day long. I mean, that's actionable day in, day out.
Yeah, and I must say, I think everybody's using the system better than I do. I just wait for people to post stuff and then I throw it in the graph. I'm like, oh, user posted the ceiling and floor. Now I can use it. Right? I mean, I just literally, I just wait for everybody else to post. I'm like, oh, I'll put that in.
Yep, users made me some extra money this week too, so I'll give her kudos to that.
Yeah.
I'm just doing what you guys show us to do, but I ask a million questions. So I think the format of this is good. And there's like 20 people in here, and nobody's asking questions. So we encourage you, just speak up. Now's the time that these guys here, they want to help and answer.
I'm going to call on AP.
Yeah, the only Yeah, I'm listening. The only comment I do want to make is that, I get the same questions over and over again is where the levels coming from? How do you get the levels? And I'm like, guys are posting charts. Milk's posting the yellow box with like every possible level that you could need. And as you said, Milk, right? It's easy to convert, right, from one ETF to another and, quickly kind of correlate fair market value, map it out. But like, I just, my comment is, it's like, stop trying to reinvent the wheel when people are already giving you all the data that you need. There's no secret sauce from one individual to another. It's just that some people paint that data a little bit differently, but in the end, it's all the same, right? So I'm like
Correct.
Russell. I wait to post. I also post some stuff, but again, it's I just wish people read and listened more rather than trying to convert it and then spin it in some way that does not make sense at all.
And you do really good with that AP. Like you show that day in and day out with vector, like the setups. Like it's strategic, right? You don't win 100% of the time. It's all about probabilities. Like, I mean, we already know from doing this for a long time, like freaking 70%, 80% win rate is absolutely phenomenal. Like that's astronomical, especially in futures.
Oh,
Now you can
exactly.
convert that, yeah. And if you can convert
Yeah, I
that over into
mean,
options, it's a little different, but
yeah, and what risk management is also a big part of it. There'll be days where, if you're stuck in some chop and you just keep getting stopped out 20, 30% here and there, but that eventual winner will come. We saw that today, right? I drew that consolidation box on SPY. Well, eventually, when we broke down to the downside out of it, I mean, that one winner, if you were getting chopped within the box and not playing edge to edge, that one single winner accounts for every single loss. So I think it's just positioning yourself that even if you're shooting 40% on the day, that one winner will cover it, or the next day you'll come out on top. But I think it's the people that revenge trade trying to keep that 80, 90 percent win rate. I just, it's not realistic. And then eventually you're gonna you're gonna remove a stop loss and you'll get wrecked, right? You'll take a, I've seen people blow accounts because they're just hoping for reversion. Well, you know, trade off of probabilities and data and price action versus you know ego. Don't let the ego get in the way.
that's absolutely the killer. You're like, okay, I have a great setup. I can't be wrong. I'm going to move my stop or remove my stop. You're
Yeah,
guaranteed to blow your count at some point in time.
right. I'm glad that you pulled this up, right? So, I can tell you right here that I had mm, I had two stop loss get hit. Um, One was for break even and the others for like roughly 20%. But it happens, right? And you guys can easily see, as I was trying to get to the upside, right? We all knew the sentiment overall was bullish. But we couldn't get out of that consolidation box. The two attempts, three attempts that happened, um, I went for it, right? And I eat my own dog food. Um, but that eventual breakdown below the five, there was two of them. Both were profitable. On the one, it came back up. I made, I think, maybe roughly 30% on my puts, but heading into close, that was that was several 100%, right? And it's just, I keep telling people, take the stop loss, keep trying. I could care less if I have 10 to 15 trades, right? If my stop's getting hit, but there's days, right? If everything is working, I might just have one or two trades because, we're just managing that trade throughout the day, but it's a directional trade. But in chop and in range days, you might have, a handful of trades and only, few 20-30% of those trades will be profitable. But it's managing the risk, right? Or just avoiding it altogether. If chop is not you, mark it out, stay away from it. And I'm grateful. There's a lot of us just posting all this, and it's all, for free, right? And I do respect Russell for jumping on voice a lot. I listen to that a lot. I say it's so hard to actually actively trade and post content to Discord. I mean, trading it in itself is rough because you gotta manage yourself, your emotions, right? You gotta manage the trade. But on top of it, take screenshots, notate, and type up text and even speak. It really takes a lot of effort and energy. Um, and I do appreciate all of that. I know, um, I'm sure there's many, right, that don't understand the level of work and effort that goes into this, but hopefully, they come around and they do appreciate it and leverage it, right? Leverage it to be profitable. That's what we're all here for. Also, my last comment, user, you did awesome.
Yeah, you've done phenomenal tonight, user. That was spectacular what you shared with us tonight. Like, that's kind of what I want to see is like, we have that open voice channel for you guys to study, to share, to teach, share ideas, look at setups. Like, feel free to use that every night. If you guys are like, hey, how many of you guys want to like hop on at 5 o'clock tonight, 6 o'clock tonight, 8 o'clock tonight? If you have 2, 3, 4, or 5 people, awesome. And it only benefits everybody. And then if you guys are doing it, I'll hop on, Russell will hop on, Moose will hop on, Big Gun will hop on, Rag will hop on. It's there to benefit you guys. So if you guys like have specific questions, want to go over stuff, feel free to post and say, hey, let's hop on tonight. It's an open community forum.
And thank you for giving us the platform to do that because, we all have so many questions and we can help each other without having to, bug you guys all the time.
Yeah, it's a benefit to you guys all. And then, I kind of put you on the spot, user. I kind of like delegated and said, hey, we're going to do a UAT group with user. So sorry about putting you on the spot, but I kind of look forward to putting some of you other guys on the spot. Be like, hey, I see Lem doing well. I see Ryder doing well. Like, if you guys have something you guys look at consistently, like, share that. Like, there's so many ways to utilize the system. I use it more specifically a certain way. Big Gun uses more specifically a certain way. Arsenal Profits uses it a different way. Like, user uses a different way. Like, there's so many strategies, and we only get better by sharing those strategies.
I know this has been life changing for me, this whole RCG journey. So I'm really happy to be in here trading with all of you. And if I never go audio again as a group, I just want to say that I think a lot of people share that sentiment. You guys have been so forthcoming with all of your knowledge and experience, and it's just been a really collaborative experience. So we appreciate it. So I'll just say thank you from everybody. Yeah. So does anybody have any questions about this QQQ live I have on the screen before I take it down? Because Russell posted this about 15 minutes ago. Any wrap up, recap stuff they want to know about?
and everybody kind of sees how I draw this out throughout the day, right? I mean, when we're hitting levels and I mark the call or put side, that's why the lines are shifting. You can see when you look back on it, it's like, good God, how could you not take that put at 88 cents when we hit our line over here and then just write it up? You know, it looked so simple. During the day, it's like, is that going to hold? You know, the trade's unfolding, but a lot of the times these levels are pretty solid. So it's like AP's saying, you know, let's say that 88 didn't hold. I mean, if you stopped out at 70 cents or whatever, I mean, that's not a very big loss. See, look at the upside. It's 88, peaked at over 3. You can take any one of these lines as a call strike that are above it to even have more leverage. So kind of very, I mean, I just put in the open lines and just kind of cross them off as we go, and they become either resistive or supportive later on.
Yeah, Russell, what I really like there, right, is, that shows playing off that supportive level. If one was to play off that, vector, and I'm trying to squint, I believe that's what, 1 minute. And you get stopped out. I see a lot of people just look at it as a failed trade, and when it gets above that 1 minute vector, they don't get back in. Right, and then it takes off without them, and they're just watching, and I'm like, well, if you entered on that test, on that initial test, why didn't you re-enter when it got back over it? Right, so like if you keep your stop losses tight, you can take multiple entries and then be on the right train, for the right ride, right? Have that perfect ticket on that huge ride up. So I sizing is always important, right? And I forgot, I think maybe user you posted it in once, but not going full entry in, maybe 1/3. It breaks, stopped out on the next one, 1/3. And then Russell, as you mentioned, when you do have that, one of your resistive levels or previously closed state turn supportive, enter again off of that. Or you might have additional tabletop that may form, right? Add that additional 1/3 or 2/3 of an entry at that point, and then just manage the trade from that point on, right? It's not one and done. It is just keeping enough liquidity in your account so that you can take multiple entries.
Yeah, because it adds up day over day. I mean, $88, $100 to play. It's pretty reasonable.
It definitely is, because you can like over day in and day out, like knowing your risk values. If you're risking 10% on a trade, not your whole account, but you're putting $100, I'm gonna risk $20 of that $100, and I look for multiple reentries. Specifically when we're looking at strategies, how Russell shows it day in day out. Looking at the call side, put side, like you can look at those confirmations and say, okay, I failed at 10% stop out. Well, now I have a confirmation above. I can take another 10%. What's $10? I guess it depends on the individual user, but it's it's pretty strategic. And when I say strategic, it's repetitive, right? We see the same thing repeat over and over and over again. And Russell's been very generous. He's been in a voice chat like every day for the last several weeks, trying to explain the stuff and show people. And it's been a huge value for a lot of people. I'm speaking for myself and, instances that people have shared with me, but it's pretty phenomenal because he's walking through this every day, taking time out of his day to show this and walk people through it. So I mean, I want to commend Russell for that because it takes a lot to do that day in day out because it's taking time out of his personal time to do that, which takes away from his trading and doing development on the system. So, and I kind of wanted to, if it's okay, I wanted to call on user a little bit to kind of share her experience, if she wants to, a little bit in her personal life, but specifically over the last, I don't know, year or two that she's been with us in RCG, like her growth, if you want to share your story.
I love how I'm being voluntold to do things. I'm just
Oh,
kidding.
voluntold. Okay.
Yes. No. I've only been trading for 2 years. So I've been in RCG since last I think May. So like it's just now been 1 year. And I came from trying to learn all different kinds of trading and not really being able to commit full time to it because I get pulled away a lot and I still get pulled away a lot. But I've been able to commit more time to it in the past, 4 months than ever before. And my learning curve has just been phenomenal since I joined RCG because, like I said, they're just sharing information and sharing knowledge and letting people ask questions. And, the group wisdom here of experience is I guess I kind of phrased it first time I ever talked to Milk. I said, I feel like, I'm one of the older people in here, and yeah, I'm a toddler compared to some of you guys who aren't even old enough to drink. You guys know the system inside out. You're on it every day. You're learning it. A lot of you are doing that and school together. So that made me feel even more inspired to just be on the learning curve and dive deeper in. And then after a while, you start figuring out your strengths and weaknesses, and you're able to build on those. So it's just been a really overwhelming journey. So I didn't really expect the personal growth to be as important as the trading growth. I can learn skills. I pride myself on being good at charts and recognizing patterns and things like that in life because I was important that I could do that in my other job. But yeah, the psychological side of it is really, really hard. And I've also found that there's a lot of resources here in RCG for that too. I just really appreciate everybody and their time. Time is priceless. Everybody's gonna have a different skill set, a different level of risk or capital to work with, but everybody's here every day looking at the same information and just trying to, have that edge. And I really do feel like we have that here in my limited experience. I don't want to go anywhere. So I appreciate that. Thank you.
Well, I want to contribute that too. Like, I always say homework pays. And, the homework that user does, and I might be overstepping, but has enabled her more time in her life. So, when you work for somebody, you're selling your time, right? What's the most valuable commodity in existence? Time. So it's not money, it's time. So if you can then own your time, are you truly wealthy? Yes. So if you get to a point in time, and it can be trading, it can be anything, but where you can afford yourself time, you're no longer selling your time to somebody else, and now you fully own your time, now you're wealthy. So like, I'm just gonna throw this the user's way, but she has way more time in her life now where she doesn't have to sell her time, so to speak. And I see this with a lot of other people. Obviously, it doesn't carry to everyone. It's not a guarantee. Not everybody makes it, so to speak. But when you do your homework, study, and put the time in, and be consistent with that, it really does pay off. Like, I own my own time. Russell does. Many of us others do too. But really, that's the goal, right? You put the work in, you study, eventually you afford your own time. So keep that as the goal versus just saying, hey, here's a set dollar amount I have to make every day. Focus on what affords me the time to own my own time that I no longer have to sell to anybody else. That is the ultimate goal.
I agree with that. That's just the side of it that you can gain so much when you can be in control of your own day or time, manage it. Coming over from momentum trading, it was frantic, it was chaotic. I was getting up at 4 in the morning. I was trading till 8 at night. Options is great. Can't even do anything till 9:30. So that again, just kind of gives you some choices that you can use that time for prep and study and not just be going to the races as soon as you wake up in the morning. I know a lot of you guys do futures and you're up at night, but it seems like you're able to manage your time with that as well. So everybody's got a different story, but we're all here every day doing the same thing. I don't know. It's just been really different than anything I've ever done. Um, One thing about the fractals, if I could just say this, is I do see a lot of people in chat saying, well, about the cost and this and that. And I can tell you, this is one of the best tools I've ever used, for work or for anything. Not to do a commercial, but I don't really see it as like a like and subscribe and join the club and be a fractal person. I see it as, we're a cooperative effort. These guys have been doing this at their own expense of time and sweat equity and money and cost. All this time, we're just helping keep the lights on. Collaborative effort, we can finally give back and contribute to the effort. And because we've been able to do that a little bit, now they're even rolling out with more good stuff and making it even better. I just really appreciate having been invited into this, forum. But at the same time, I don't mind, at all helping support it, whatever comes next. It's a really powerful tool. There's so many powerful tools inside Fractals, but there's a lot of powerful tools inside the people that build it too, because, the knowledge they carry is pretty like nothing. I've worked with doctors and stuff, and it's nothing even like that. So I don't know, pretty crazy. But I just hope you guys appreciate, like I do. I get all like mushy on you guys, but I really do love trading here with everybody. And I love trading in general because of it. Because, I was almost ready to quit like a year ago. I was like so frustrated, not getting any sleep. And it's just, overall a really good system and a really good way to look at the market.
We appreciate that, user. And that's, exactly it. You put the time in, have the effort, eventually it pays off. You keep consistent, do your homework. And overall, that's, the end goal. Own your time and being in the market, for as long as I have, and Russell and everybody, I know a few veterans here, it's challenging day in, day out. And very few careers can you be challenged every day and continually grow. If you go work at a factory job, you're like, okay, cool, I'm getting a great paycheck for a little while. Eventually you get burned out. You know, when do you reach your peak? So on the market, having data sets as we do with the system, it's continually evolving, continually changing, continually challenging us. But we have an edge. And, Russell's been doing since he's 14, essentially. So let's call it, sorry for calling you old Russell, but almost 50 years. He's systematically been developing these systems, and he's been doing for institutions too for quite some time. So this is not like some new retail venture thing. This is something he's built out for full-on corporations. This is something that you're seeing institutional style that you never really see for retail because they don't want it out there, so to speak. And not that we're widely offering it to retail, but we benefit from it. So as users come in and want to grow the system too, we can continually grow the system as well, as in contributions, for subscribing and stuff like that, allows us to buy extra infrastructure, more data. Russell's working on some other aspects right now. I don't want to dive too deep into it, but some of the future automation aspects that we can do. There's just a lot. There's a lot. There's 10 years of worth of work still that needs to be done. So I just want to commend Russell for doing all the work that he does, and as well as the rest of you guys that continually contribute. So let's leave this open for some Q&A. Anybody have any questions or comments? Russell, did you want to have any last words?
No, not much that I can think of, but trying to make sure we can all win. It's the number one thing. With whatever we do here. Most important thing in the market.
Come on top. All right. Well, if nobody else has any other questions or any other observations, we can conclude the session. And just remember, we have the open voice chat for you guys. You guys want to do a session in there, even if it's 1, 2 of you guys, 3 of you guys, 5 of you guys, whatever it is, that is an open venue for you guys. We can do study sessions, if we're looking just for the next day, for the next week, or, questions, concerns, that's totally available to you guys. All right, well, we appreciate you guys, and thank you for supporting our work above all else.
Mind if I butt in real quick? Sorry, Milk.
Yeah, Mogi, go ahead.
I just put 5 days in chat, so I want to know which day works for everybody to come and meet up every day during the week. Let me put 5.
In the UAT chat?
Yeah. Like Milk saying, we could all choose a specific day and we could all meet up. It seems like a lot of people are voting for Monday. We're getting some Fridays.
Oh, yeah. What Moki's talking about is they were kicking around the idea of having an open mic night. Because on the Sundays that we do the workshops, they tend to go long. And it's more of a presentation mode, like the one that Biggin's getting ready to do for volatility. So, yeah, just an open mic where they... Is there going to be a sign up or just pop in there?
Yeah, just pop in. If anybody wants to come in and just chat and share anything cool they see. Just like Milk says, it's an open forum. Anything they want to talk about or share, they could come in and just tune in. And they don't even have to come and talk about trading. It could just be getting to know each other. You know what I mean? Meet some cool people. So it seems like it's going to be on Monday. I'll go ahead and set up some recurring events so people could start tuning in on Monday. I'll pop in too.
It looks like we had. It looks like Fridays we had some requests too, so we could do more than one day a week.
Yeah, that's true.
We can do as many as everybody wants to. Yeah, as long as there's 2 people, we can have a open night.
Thank you. That's really cool. And then we can just utilize the channel for whenever we need to, like, just go show somebody something or have somebody show us something. That's just open. But it'd be kind of like a, hey, Monday nights at RCG or whatever. There's definitely Friday nights in Gen Chat, by the way. I stay out of
Oh
there.
yeah. Well, that's kind of the fun thing though. Like
Oh, it's
even in
fun.
Gen Chat, like if you guys want to do voice things on Friday night, have a good time, and maybe go over things, recaps of the week or questions for the week. Like I kind of like both sides of it. You know, Friday or Monday to start the week, Fridays to end the week, and it can even change. Like you know, if you guys were interested in Sunday nights, you know, potentially you could do that too. And we don't have to do a poll on that. Like if you guys want to do a Sunday night and you got 2 people that want to hop in chat, we can do that. And then probably quite a few of us will join you too if you put out an announcement in the UAT chat. So anytime you guys want to start a voice chat, feel free to put out an announcement in the UAT chat, and many of us will join. We can answer questions, go over setups, look at different, you know, all sorts of things. So, you know, it's totally open. We can schedule things like Moki was just talking about, but it's also really open as well.
Thank you, Mookie, for helping with the production too. You
That
do a
was
lot
all
of
you guys.
producing
Thank you guys.
videos and editing and documents.
And I can even volunteer AP on some nights too.
I sort of knew that was coming.
You should. As long as you know me, yeah, you should.
I think Sunday nights at 8 would be perfect because that's when the markets start getting all nutty again. Just kidding. I don't even
Oh,
trade
absolutely.
futures, and every Sunday night I'm checking my phone at 8 o'clock now. I'm like, oh my God, what's going on? What's going on with these guys?
Yep. And it's good to like know both sides too. Like even if you're only trading options, like, you know, how do futures and equities affect the options market? You know, if we have gap ups, gap downs, what's going on and the, you know, the overall market, looking at the macro views, like, you know, when you have more than one mind and people are sharing ideas back and forth, looking at strategies, setups, you know, whether they're looking at short term, midterm, macro, you know, it's really good insights to share.
Correlation is the key. That's why it made it so easy just to exit the ES trade this morning off of that Q rejection, right? I mean, the more data that you have, as long as you don't, right? What did Russell say? Paralysis by analysis. But if you have the right focus and right data sets that correlate, definitely help with entries, exits, trims, whatnot. Gives you a good sense of overall market trends, reversion points, whether it's futures, whether it's options, you know, it's all relative.
Absolutely. And like when it comes to the analysis paralysis thing, like, you know, you can look at 10,000 things and be like, oh, these are all data points. Well, what do? You start layering data and be like, okay, I have 2 or 3 data points that align, and now I have confluence. Well, if I have 2 or 3 data points that align, now I have something that's much more actionable, right? So it's not that it's about every single data point. It's like, you know, what ones are the most important, what are most relevant, and when I have multiples that align, you know, that becomes very actionable. You know, user kind of goes over that quite a bit, like, you know, using like what I stream in milk charts every day, and then using the fractal system, using what everybody else posts, and then like her data sets, what she's using for the end of day closes. Like when you can pair those all together, you can strategize and you can manage risk, and it's not, I'm going to say it's not terribly difficult. It might be hard, you know, first starting out, but seeing over time and seeing it repetitively time over time again, it's not super difficult. And then Big Gun's putting in the comment chat, if anyone has questions that are left unanswered, please send before we hop off. So if you have any specific questions that we couldn't answer tonight, or later on you think of, feel free to put it in there, or even ask in the UAT chat. I think George had a question.
Yeah.
Go ahead, Big Gun, if you want to answer that.
I was gonna read the I was just gonna read the question. I thought Russell might, or you might best answer that.
I guess I would need to see a specific example, George.
Is this the right question about the end
Yeah.
of day value? Okay.
Mhm.
On real time. So with real time data, are we always going to be using the current pivot? I think he's referring to, let me grab it. On the histogram, yeah. This isn't the one he's talking about, but this is an example. When you're clicking these buttons down here, these blurry buttons, are we using current or yesterday's? Because back when you were, back when we would determine the, I do have it here. When we would determine the yellow box, for example, and let's just put QQQ in here. You would always pick yesterday for close and then load all of this. And so I think his question is, now that we have real-time data, if we were to try to run this during the day, do we still need to pick yesterday, or can we pick current? Because these values are different. What's the ideal one to choose?
The ideal is, to me, is always current. I know Russell uses current most of the time too. So
Okay,
when we
and
look at
that's
that,
intraday. Okay.
Intraday, because if we're approximating towards the pivot, we're looking for a close above or below. We want to derive what is the current pivot. So using that in option analyzer, that tends to give us the current value above and below where we are currently at.
George, does that answer your question?
Yeah, because the pivot's what the pivot value is. The new pivot is what the vector value is. So when you see the purple vector value, that's the new pivot. So the new pivot would be 5/20/26, if I'm reading that correct. 5/20/26. So if we went back above the pivot line will then be set to 5/20/26. Current is the 5/18/91, the last plot. The close price, the last price is current. It's kind of weird, I know, because it's saying what's your reference you would like to use? Would you like to use the pivot as a reference? Would you like to use the new pivot, which would be 5/20/26? Would you like to be where you're currently at, which is the 5/18/91? I think it says. And then the thing below that, I have no idea what that says. Yesterday's?
That's right.
Yeah, yesterday's. We used that when we were doing the when you were having to pull them from close with the 760/50 for the yellow box. Pull the yellow box.
Gotcha.
If you're in the
Yeah.
current
So
session.
Yeah, so if you change this to a wave one daily option analyzer, That pivot should make more sense.
Real
Yeah.
quick, is that yesterday's the yesterday's close? Like if you click that yesterday button?
Yeah,
Is
it
it?
should be.
Okay. Okay.
Yeah.
It should.
Sure. 521.22 right there. Yeah.
Because you've got to. So the thing kind of has a lot of AI stuff in it, to find this stuff. But on top of that, so it reflects it back to us, and then because I don't always say this, I don't really like black boxes that much, right? I like stuff to be reflected back to me, but I like that I'm in control and can pick what I want to use. So if I feel, not that trading has to do with feelings, but if I'm looking at stuff and it seems quantitatively like I have decision support information that 518.91, like let's say that could be a pivot, and I would pick current 518.91, and then it would adjust the values around that. Yeah. So because if I'm looking at, let's say I'm looking at a cluster, and I'm looking at maybe 1015, I like to look at 1015, and maybe I'm in a 10% cluster, and I look back and the decision support is that very infrequently do we get below 1050, a cluster of 10% on the 1015. So I'm like, that price, that current price is probably the bottom of the move. So if I use current, then I see everything from that bottom on up. That makes any bit of sense. So it's not black boxing it. I'm able to make that decision and then see what is up above. And I'll tell you, so to give you an idea of the strength of this, in hedge funds in the past, there's people that will try to create just total algorithms to run the hedge fund to make money. They never work very well because it's very hard to program a computer to make human-like decisions. We can look at a lot of data points, and I know AI, I can look at data points and it can figure some stuff out. However, humans, there's a lot of more information. You can read articles and take incoming data that is not necessarily fed into like a neural net system, so it's not all inclusively comprehensive. So there's times when I've had people at hedge funds be like, my gosh, I can't get my logarithms to work very well. They back test phenomenally, but every time we forward trade and I scrape in a few pennies, I'm like, well, you need to stop using them and use a more discretionary system and get away from that. And then they'll be like, oh. And then later on, like I'll get a call. Oh, yeah, you're right. It kind of worked better. So yeah, so it's like, the system's kind of reflecting that data. We can make these decisions. And so that's why it's got the 4 options. Because when you're trading and you're looking at other information, then, and then again too, AI, like it's not really that much of a boom to trading. Because if everybody's using the same models that are coming out of the system, pretty soon they're going to be skewed and they're not going to work right. Because that's just the way it is. You can't have the herd always using the same thing. There's no advantage to anybody. The market would flatline. So that's why there's those different values to pick, make a decision.
And I think Ryder had a question too on standard deviation. Is it by default to pivot right? So in graph settings, you can also change to a vector. Just wanted to clarify.
Yeah, so the vector, you've got 2 ways to look at the standard deviation below. One is it calculated for the graph. The other one is it calculated for the vector. Because with the vector, just like the overall graph, there's a reversion that can occur. So when you get so far from the vector, you can have a reversion and come back in contact with the vector. So I have multiple of these systems running, fractal system. So I have some set up for vector, I have some set up for the graph. And we see here for users like showing, we've got the purple. So eventually, we move away from the purple. Eventually we come back and test the purple. And the purple is a learning a logarithm. It's taking in data. You can see it looks different than the vector that's in TOS or TradingView because it's learning. It has more capabilities than those. So it's learning what the market needs to be doing in order to stay long. And then sooner or later, the market challenges that. So that vector down below is reading the deviation from the vector, from price to vector, and then on the other setting from the price to the overall graph, the overall fractal information. And sometimes I'll use that a lot. I'll look at it like on the 1015 and I'll see if we're flatlining. And then if we're kind of flatlining down there, I know that, it's just consolidating and sooner or later we're going to have a move. So, and biggest thing with trading is patience. Since it's 10:15, I mean, that's a lot of hours we're looking at, so kind of just hanging out till something gives.
Since I have this pulled up, it just reminded me the Wave One Daily, and you started expressing how important it is to just learn all about it. The option analyzer was cool. I was trying to do a screenshot one day and I stretched it out. And I realized that this might be obvious to some of you, but it wasn't obvious to me in the beginning. I just wanted to show you this really quick. This histogram matches this graph, it mimics the whole entire graph. So if you're, just wanting to read between the lines and see what's going on real quick, you can look at this. Oops. Right, Russell?
Yep,
This
you
is
got it.
mimicking this from left to right. So you can see your highest highs and your lowest lows. And the cool thing about sorting them is, you can just hover your mouse and get these, whoops. You can get, oh yeah, lock mouse track. You can get these values, not just for yellow box reasons, but just for whatever you want. But instead of having to do a jumbled mess, you can do it this. But the nice thing is if you do it this way, now you're saying, okay, this is about 10 days back. I want to see what that was. This is about 20 days back. Okay, it's got to be this one. Well, that is that one. They match. So it's pretty cool. It's just another, influence or sharing
Yeah,
of information.
and like you're pointing out, it takes the data and it puts it together. So like a 4 or a 3, that's several moves combined. So it's kind of a shorthand way to look at it. And then I was mentioning these pendulum swings. We have on the right hand side, they're basically harmonics, and for whatever reason they show up in the market too. You have a really low down, really high up, or really high up, really low down, doesn't matter either way. And then you start to have, it starts to lose energy. So when you have these kind of pendulum swings way up, way down, then you kind of go up near that high, kind of go down near that low, and the energy starts to dissipate. Because the market's finding its value at that point, its fair value. So, and you can see it very vividly there. And if you look at like a harmonic wave pattern in physics or whatever, math, you'll see that same thing occur. So, yeah. And like you're showing user, I like to go in here and cheat and see what the values are because I'll move the cursor across and be like, where's the middle of everything? Because if you're at the middle, half of the trades are not going to hit there. And then the other half will hit there or get above. So yeah, when you sort them. So if you sort them like that, sort the histogram, on the little combo box, if you sort the histogram. One thing I love to do, I'll mention this from time to time, I like to find the middle. So we have the middle in terms of time. So it's H1, H2, H3, H4, H5, and it becomes the mean. So it'll show the mean. So that's about center. So half the price action will get up to there and then, or yeah, get up to there, and then half the price action will get to there or below. So, you know, if you're trying to go for an H10 or whatever it is, something at the mean, you know, only 50% of the time, statistically, it works out. You know, 50% of the time you'd lose your trade if you're doing options and let it run to zero.
The other question I have about the wave one daily is where is our close price become the new pivot? And that's the only chart that happens with is the wave one
The
daily.
close price will become the new pivot when it gets assigned. So if we're assigned an L and we get assigned an H the next day, that close price will become the new pivot. Yeah. So you know absolutely positively on the chart where to mark it. So that means sometimes I do it, I'll show it. So I'll be like, H1 is, you know, $510.20. Because I know that L whatever, like L2, let's say, has that close. And I know to get an H1, we've got to be at that value or over. So let's say we have a high percentage of odds to get an H1. I know exactly what that value needs to be. Because like you say, the close price becomes the new pivot. So by putting that on and saying everything above here is an H1, for example, or an H2 or an H3, or you can go the opposite way. Everything below here is an L1, L2, L3. Combined with the statistical odds, you kind of, just with those two things alone, you have a roadmap. You know that, okay, I've got 60% odds for an H1, and an H1 is defined as, you know, the last close price, anything at or above that last close price. So when we're below during the day on the vector, you know, on a 5-minute vector, 1 minute, 15, whatever your poison, you know that when you're getting a green signal and you have high odds of getting like an H1, for example, so you're looking at a call, maybe the call's red, and maybe you're getting a side exit or a tabletop, whichever, and you know you have high odds to get the H1, for example, you know that that could be a trade to hold through the end of the session, to the end of the session, through 4 p.m. That makes a lick of sense. Because if odds are high to be over that value, at or over that value, and you're underneath, you're waiting for capitulation, basically, to move back above, for reversion back above.
I'll add something to that too. So user, if you want to look at the current on the histogram. Okay, so we know by default the market is forever long, right? So anytime we get a default pullback, what is our measured move from the highs of our H values to our next L1? Our easy target is 50%. So look at that H27 to your right. Take 50% of that, and then project it on the H1, or to the L1 to the right, and it plays through and throughout. You can load more contract, or you can load bigger data sets on this, but this is very consistent through and throughout. Like L1 to H is
Okay,
not
you
the
lost
same
me
strategy.
at halfway. So you said halfway up to 27
Correct.
and then load that.
Yep, as your halfway point. And then to your L1 projection target base, which is the next candle over. Easy target.
Okay.
Does that make sense?
Mhm.
When you load a larger sample size, you see it more, like you were a little bit ago.
Yeah, this sample size is a little small, but like Milk's saying, when you get a big one and you got more data points in there, it starts to become like if you load a wave one daily, just because it'll have more data points.
Wave
Or
one.
760. Either way.
This is, yeah.
The wave one daily is very visual because it just has a lot more data points, but that's fine too.
A hotkey for it, but it came off during the presentation.
Oh, gotcha.
Here we are.
Yeah,
It
so
didn't
that
take
has a lot
long.
of data points. There it goes. And to Aaron's point, if you pick the sorted, you know how it says normal, it's just left to right. But if you pick sorted, it'll show where the mean's at, right? So it shows your center. So the mean's the center of the moves.
And then these would start to be the outliers outside the 50% bands on like a spread monster, maybe.
Yeah, you got it. Yep. That's why in the trading they're like, well, if you hit 51% of your moves, that's showing you where they're at.
And we can see that
So
repetitively from the L to, or from the H to L when we have the larger L moves, or H moves, sorry.
yeah, the bad soap opera.
So there we go. That's a good example. Oh, the back one. So you can look at these H moves, the large H moves. If you were to measure half of each candle to the L move, it's through and through consistent strategy. So the high of the H, just right above where you're at, halfway, and then projected onto an L move
Forward or backwards?
forward, because it goes left to right. Left is last, right is current, most current. So we can do measured moves on that. The distance between the pivot and the high, the halfway point, and then to our L move on the right.
When using current as the pivot or halfway. What's tomorrow? Look at this. This is sad. We had a $5 range today. Anybody else like frustrated with that? I don't think I've ever seen it that low.
Well, it
Oh,
had to be
there's
expected though with NVIDIA today. You know, the market was consolidating, waiting for NVIDIA to
yeah.
report before the large move.
I think we've had a couple of 2.8 days on the queues over the last year or something, I remember. Not too fun.
And I'm going to guess that's going to correlate more to FOMC days or large catalyst days like, you know, NVIDIA earnings.
Yeah. Yeah, it was days where the market was pent up waiting on an event. Like today, it was just waiting and abiding time. And you know, it gets frustrating because if you're trying to take trades, especially on the option front, and they're just going off for like 10 cents, you're like, oh my God, this is painful. if you can't, because it gets spoiled. Because some days, 30 cents, so $30 to $5, right? 30 to 500, 30 to 250, and then when you have a 30-cent move to 40 cent, you're like, well, that's not fun.
Well, to add to that though, your NVIDIA trade, your 180C that you've been holding obviously was up, what was it, 40 cents to 120 the other day. Well,
Yeah.
with this aftermarket move right now, it went up to a high of 143.17. Currently, NVIDIA is trading at 141. That should be closer to 150, 180 tomorrow. I'm gonna guess.
Yeah,
I haven't looked at the
that
calculation on it.
that sounds about right. I haven't either, but based on what it moved the other day, that's where it should land, somewhere in that range.
So that was a really good play. Even if it doesn't reach, the 3,000%, that's still
Yeah.
pretty darn good.
And I mean 3,000, it's certain point it gets ridiculous some days with how things move around.
But it plays out. I mean, you're playing like several contracts, like obviously take something off to make the trade free. So when you get to that point, take a couple contracts off and then let it ride to that point.
Yeah,
Like you were looking
definitely.
at on the NVIDIA, wait 21 daily.
Yeah, definitely. And honestly, I have not seen this level of volatility ever since I've been doing it 40 years trading. I mean, this is like, and now that they've done zero DTEs on these other ones, and then also you can use SPX too. I show QQQs just because it's easy to show and illustrate trading, but it's kind of ridiculous at the level of volatility.
And they're looking at doing like 24-hour options too. So adding those to some of the major ETFs. And I know that's like a dream for you, Russell. Be able to do QQQ overnight.
Oh my God. Being able to go in like at 6:30.
Yeah.
Yeah, it's just like it's 100% ridiculous.
Yeah, it is. And that's what we're moving to though. I mean, we moved
Yeah.
from Monday, Wednesday, or weeklies or monthlies, weeklies, bi-weeklies, tri-weeklies, and now every single day on major ETFs. And that's where it's moving, is to the overnight. And technically you can on like SPX, if you have a major weighted account, it's more for institutional, but institutional can move derivatives overnight openly. We have to be an approved account for it.
Yeah. Yeah.
But I mean, that's exactly what the market's moving. They're like, hey, how do we bring more activity in the market? How do we bring more, liquidity in the market? And they're trying to capitalize on it more and more and more. There's even betting options now, saying, hey, the market will close above or close below, just kind of like a spread almost. But
There's really like something that you can do. I mean, that's what we're doing tonight.
Mm-hmm. Correct. So there's actually contracts for that now where you can take bets, so to speak, saying, hey, we're going to hit X price by here and do the overnight. It's almost like sports betting.
It's crazy. I think you guys have been saying it, but AP said it too. Like the most profitable trade would be close to close, right? If you have the right numbers, you get it at the close of one day, and then you sell it at the close of the following day. Isn't that the Pelosi trade that Russell's been trying to teach us, like to
Yeah,
get
the
it for the
overnight
next day?
volatility. Yeah, the overnight volatility is where a lot of the gains come in for the market. Just like we're seeing
Yeah.
right now. I mean,
Yeah.
NDX 100's up, DS is up, everything's up.
That's kind of what we were talking about too the other night. Yesterday night. Looking at capitalizing on NVIDIA earnings tonight, like taking out of the money put options or call options. Even taking a straddle strangle approach, taking one of each for the overnight carry. It was kind of mispriced, depending on where we open, obviously, for derivatives in the morning. But if we stay up here for the overnight, like market makers absolutely underpriced, the upside on calls. They had a very limited scope, priced in more downside for tomorrow, in speculation of a miss on NVIDIA's earnings.
It seems like the media is still overall kind of bearish, right? Trump's evil, they're
Very.
ruining the economy, everything's in the toilet. But that's not what we're seeing. That's not what we see by our numbers. That's not what we see what's happening in the market. They do everybody a disservice, really. It's just fear
Oh,
mongering.
well, we just seen that in some of the reports last week. Some of the sentiment reports, are low. They're lowest on inflation since 2023. So, there's a couple key points to this if we're looking at like a total news macro view. There's the sentiment saying, hey, inflation expectations are less now, but the new big beautiful bill that just passed, it's giving a lot of tax cuts. So if they can't supplement those tax cuts and more to replace that, we're going to run out of deficit. And it's kind of what we seen the other day on the 30-year Treasury last Thursday. We seen yields skyrocket, like 5.3, 5.4%. That's why we took that huge dip. So, when they're seeing that, that was the speculation. Like, okay, if we pass this bill, the U.S. is going to be at a huge deficit. We're going to be further in debt and less able to pay our debts. So our credit rating goes down because our debt to income ratio is way less than. And that was kind of the huge catalyst there for last Thursday, Friday. Now, we're seeing earnings come in like NVIDIA and stuff that's propping that up a little bit. And if we can supplement some of this with the tariff stuff, if everything comes to fruition with Trump always trying to plan it, not saying it's going to, not saying it's not going to. Obviously, I'm hopeful in the bigger business model, because there's going to be some pain in between. But he did the delays on the UK tariffs, which is kind of why I ran up the other day. And if we come to some kind of deal with the UK, China, and everything within the next 60, 90 days, that could be very beneficial. Right now, we're still running at a deficit, even on the tariffs, on the import taxes and stuff like that. There's been rulings against certain things. So, it's a big mess right now, but the market is pricing in less uncertainty. Originally when we were having these 100, 200, 300, 500 point swings in a day, the last couple months, it was because of the risk of uncertainty. The risk of uncertainty is less now. They're like, okay, if something happens, we can still price it in. Last month, they're like, we don't know. We can't even fathom to price it in. So that risk of uncertainty is being priced in less and less as we go along. So that's what's dampening volatility, so to speak. Not that volatility isn't great right now. Obviously, yesterday wasn't superb, but if you guys remember, that 3 or 4 week period where, we were pricing in 200 to 500 points a day on like the S&P. I mean, that was like Russell was just speaking. We've never seen that historically. Like I haven't seen that amount of volatility in my whole term either. So that was a newish experience, but we could measure it day in, day out, even with fractals. So that was pretty superb. I'm just hoping the summer we don't return to squash volatility like we used to see 4 or 5 years ago, where during the summer periods, it was kind of a lull. Well, actually more than that, pre-COVID. Like on ES, it used to be like 20 points a day was a good day. Obviously we're used to like 100 plus a day, but I don't want to ever see that volatility get crushed back to that price point again.
Oh, it's
And I don't
horrible.
think we will.
It's hard to
It
make a
is.
living trading on something like that. It's just really bad. Pray for
Well,
the next
especially
day
on
to be better.
especially on derivative markets. That's even
Oh,
more horrible.
it's just destroys them. There's not much premium to sell. And if you're trying to trade premium, there's not much to gain. It's like gets really, you're ended up with $100 on the day and putting in, decent amount of capital. So yeah, I'm like you. I get paranoid about that. When's it going to dry up? If hopefully later than sooner.
Yeah. And historically, it's typically summertime, but we've been
Yeah.
pretty privileged the last few years.
Yeah, definitely. Now, last August was weird when we had that carry trade. Supposedly they were blaming on the market meltdown on the carry trade I think it was the yen carry trade, Japanese yen, where we had a big spike and the market like just really dropped out of the blue. So maybe we'll have some other black swan events in the summer. I don't know.
Well, I'm sure we will with tariffs, especially when we approach July 9th with the UK and everything else with those 90-day grace periods.
Yeah. Yep.
So we have some pending catalyst.
And it seems like, I don't know, it seems like Russia it's escalating over there. So we'll see if Trump can bring it under control. I just noticed they attacked some stuff inside Moscow. So,
Yeah,
or
with the
not in
drones.
Moscow. So yeah, somewhere in Russia. I don't think it was Moscow, but somewhere inside Russia.
I think they had an
So
attempt on Moscow and it got squashed.
got squashed. Yeah. So, if they start trading missiles back and forth, and Russia's bound to have an accident, hit Poland or something at some point. Something go wrong. Maybe I don't know, but could trigger some events.
Yeah, and on the opposing side, like what Trump was posting last week with the trade embargoes against Russia, like trying to lift some of those and actually encourage like trade between Russia, like if that comes to fruition, like that's a huge stimulus to the world economy. Like if we can
Yeah.
open back up free trade between everybody, so to speak, gas, oil, all the precious metals and stuff. Obviously Russia and China are kind of paired a little bit, but there's still also like, some precious metals and other, elements over there that we could utilize. So that'll fluctuate in also the world economy. So that's kind of an interesting point too, if that comes to fruition, where we can settle the wars, lift embargoes against Russia, this, that, and the other.
Yeah, Trump's really trying to push that to derail Russia. Be like, look, let's do something constructive instead of blowing each other up.
Yeah, I don't know if any of you guys have friends over there, but I know some people over there, and the ones that do really well do really well. The other side of the economy is like ultra wealthy or ultra poor. So there's like really no middle class over there. So developing that as a economic stimulus, developing more middle class stimulus over there would benefit everybody. More consumers. more trade. Well, does anybody else have any other questions or concerns? I know AP left us early.
He's probably trading.
No, he had to put the kids to
I'm
bed.
just kidding.
Well, let's look forward to doing this more. Like, obviously we're going a little longer tonight, but that open UAT voice channel is for all you guys. You guys want to start a channel, or open it up anytime you can. Have somebody join. Everybody else is going to join. It's going to turn into an open discussion. We can review things, study, answer questions, look at setups. Like, I just can't reiterate that enough. Like, try to utilize that. Don't be shy. If you have questions, be like, hey, does anybody want to join me tonight? I'm going to be on there at 6 o'clock, 8 o'clock tonight. Feel free to do that. Okay. That is there for you guys as a resource. And just to reiterate, obviously we all work hard, but we also appreciate you guys for supporting our work. It enables us to get more servers, pay for data, do a lot more things. Just if the content's there, if there's enough demand, we can do a lot more. You have any final words, user?
Just thank you again. I can't thank you guys enough. I come in here every day like, oh boy, what now? Thank you. Crazy. Never gets old. Like, I'm not a morning person my entire life, and now I'm like, set my alarm, get up early. Love it.
Well, I guess there's a saying about that. If you do something in your life that gets you out of bed in the morning and you're excited about it, you probably found your calling.
Yeah, podcast and video sharing is not my calling. Just kidding.
Well, you did awesome tonight, and we
That's
greatly
fine.
appreciate
Thank
you
you.
sharing.
I mean, I don't know about everybody else. I was super stoked that we can just be asking questions, right? Because, things are getting really streamlined and efficient, and you guys have put in so much work into it. And it's fun to hear you, Russell, live on there talking in the mornings and explaining what's going on. And, you've been able to answer a bunch of questions for us and Moki and Biggin. And, for months that I know of, you guys just haven't had 2 minutes to rub together. You've just been trying to get this thing online and launched out. So we appreciate you guys for that too. For taking the extra time to kind of make sure we understand it, but also goof off a little. Appreciate it.
Well, thank you for that. And we appreciate you too. Yeah, Russell's been, well, I won't go into too much detail, but Russell's been night and day working on getting this, mainstream for, regular access. And, just make sure to thank Russell for that. He puts in astronomical hours. Like, I put in a lot of hours, but he puts in more than I do by far. So, especially specific to the system.
Well, specifically, thank you, Russell. And Greg Moose too, right?
Oh
He's
yeah.
like the behind the scenes guy. Yeah. Pretty
Yep.
amazing.
He likes being the hidden moose.
You should
And
come in
I-
here.
By the way, I was just checking the 10-year bond. It's under 5%. So as long as it doesn't get over 5%, stock market does okay.
yeah,
As opposed to that. So hopefully it'll stay under 5.
that was the big kicker last week for the 30-year.
Yeah. I don't even know if anybody buys a 30-year, do they? Thing
Well,
pays like no interest. Who would want to get wrapped up in it? You know what I mean?
well, that was just the thing too. There was when they offered the 30-year last Thursday, like there was no interest, right?
No
So the
buyers.
demand was demand was gone. So it hiked yields real quick, and everyone's like, "What is going on?" And that's when we kind of
Yeah.
cascaded on Thursday.
Yeah. Yeah, I mean, nobody wants to buy something at 4%. I don't know what the 30-year is right at the second, but I haven't checked it. But
Around 5.4.
yeah, and with inflation the way it is, basically
Yeah.
you're guaranteed to lose money on that.
pretty,
Guaranteed
pretty much.
loss. Yeah, okay, I'll buy that. That makes a lot of sense.
Unless you're a market maker.
Yeah. Oh, then it's great, right? You want to
Yeah.
just get your commission, get rid of it.
And I think was it the 5-year or 2-year? I think it was the 2-year. It was the 2-year or 5-year today that reported, and there was good demand for it. The guarantors, I think, bought like 23%, and then everything else was, market making like 73%. Orders were filled, like 25% of the top bids were filled. Like it was, I think, a pretty good auction today.
Yeah, pretty strong.
Yeah. So demand for those for the short terms were very good.
Yeah. If inflation will keep cooling off, then it'll put downside pressure on these bonds too, and the interest rate will. Because one bad thing is if they hurt the stock market, but they hurt the U.S. economy worse. Because and if they're paying 7-8%, if they did get that high 7-8% interest on these, oh my God, I don't even know what that interest payment would be, but
We,
trillions.
we couldn't fulfill it.
No, I couldn't be paid. I don't know. And that's when wars start, right? Because everybody gets mad. But
Yeah.
the Fed, I don't know. The Fed, the Fed's the last case liar. If nobody shows up, really, they've got to fund the government. So gotta keep turning out money. Unfortunately.
Yeah. Refinancing our debt. That's, the situation we're in, like, with how many trillions we are in debt, like refinancing that and be able to meet those obligations is pretty substantial right now. And I don't know if most people realize that. And that's kind of what, in part, and I'm not going to speak, exactly, but Trump's trying to do on bringing debt down, and hiddenly, he's not openly like talking about this, but refinancing our debt.
Yeah.
So like how he's trying to drive certain currencies a certain way and kind of almost lessening the dollar. Obviously, he said that's not his agenda, but lessening the dollar so that we have foreign currency swaps to refinance our debt at a cheaper rate. That's kind of an objective of what you have to do. So it becomes a certain point where we can't even barely pay the interest on our debts, or it's more than a substantial part of our GDP, which is why we got that downgrade on the credit, where it's more than like 6% of our GDP from a AAA to a AA on Moody's. But they were only like the last party to downgrade us. They weren't the first.
No, not at all. Well, and the debt, if something doesn't happen, it's on course to be 30% of revenues. And that starts to get unsustainable, like you're saying. It's funny, I watch CNN and all they complain Like I watch Fox, CNN, and Euronews and stuff, but CNN, all they complain about is, oh, he's trying to cut this program, he's trying to cut that program. They don't ever say that the debt's out of control and these programs need to be cut. They're just complaining all the
Yeah.
time. And it's like, well, something's got to give. Either keep giving the programs and the US goes bankrupt, or cut back and the US does not go bankrupt. We'll end up like Japan, Italy, just really bad situations.
Yeah, and it's like comparable to the average consumer. Like if you have a variable interest rate on your home, you like sign up for a low interest rate. Well, 5-10 years from now, that variable interest rate skyrockets to where you can't even make your house payment anymore. What happens?
Exactly.
You default and the bank takes your freaking house.
Exactly.
It's the same thing.
Yeah, and the US cannot be in a position to do that. That would be disastrous.
Yes, it would. I don't think we're near that. Obviously, there's more controls to factor, but
There
it's
there
still
are,
something.
but it's something to consider. You see how they spend in Washington. I don't, it's just, and now it's gotten even worse, it seems like. More pet programs.
Oh yeah, absolutely. Like I was watching C-SPAN the other night, watching the conjectures on the BBB, the big beautiful bill, in the House, and almost all the Republican Party didn't show up, just enough to vote against the amendments. And it was all, not being political, but it was all Democrats complaining about special interest spending. Like, hey, we're not allowed to spend on transgender transformations anymore. That's wrong. Like all this crazy stuff. It's like, why are we paying for this? Like, why are we funding this? Like, that's our tax dollars, and we're also paying like, I mean, if you think over like a 30-year term, I mean, we're actually paying twice of what we're funding it. With the variable interest rates. Like it's ludicrous, absolutely ludicrous. Like we're getting robbed as taxpayers.
Yeah.
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 But enough on politics. So
No way to solve it all here.
yeah, we could
Take
go
a few,
all night on that.
take a few more hours to fix it.
Yeah. But did anybody else have any questions? No user was just clicking through some of the yields and stuff.
Yeah.
That might be something that maybe Big Gun can do a little session on. He was looking at, I think on the next one, looking at some of the hedging prevalent things on different ETFs. Maybe we could look at some different of the bond conjectures. Look at some of the other things like that.
Yeah, we could definitely do that. Especially as we like June for this year, we have like sort of a maturity wall. I think as far as I know, that's kind of where most of the, you know, debt is maturing in this specific fiscal year is in the month of June. So it's definitely something to watch as guys what you guys are talking about, like, the strength of like auctions and how that reflects under the underlying market will kind of be indicative of like whether there's a larger term, fear of some kind of like, you know, credit crisis with the US, or, whether it's can be staved off somehow, or a muted fear. And in the next, essentially in Trump's term, I think we have somewhere between 20 and 30 trillion to, I'm trying to remember the exact number, but it's an astronomical amount of like essentially most of, the existing debt to be matured is in the next like roughly 5 years. So definitely a concern to watch there.
Yeah, there's a few things going on with the Fed in June. I think they're looking at um, reenacting some of the repo things. I have to find, I'll look at that later. But staff policies. Yeah, there's a few things that are kicking off in June with the Fed, where they're looking at taking care of some of the debt or refinancing, doing some of the repo things. So that's definitely a big thing to keep on your watch list on the macro view. But yeah, anything you guys want to think of, any topic, any question, want to go over specifics on the system, feel free to use the voice channel. We can schedule it. We can put it on the schedule for like a specific night, like, whatever you guys want to utilize, feel free. That's what it's there for. So don't be shy. We all learn together communally. Like, I mean, I still learn stuff every day. Russell learns from you guys every day. All of you guys learn from us every day. So that should speak to accords of like how important that is. We all come together, we all do things, we see things in different various aspects, and it's a very communal thing. I think Ryder had one last question. What happened to our 2008 symmetrical resistance? I think that's geared towards Big Gun.
So that's a great question. So a lot of like kind of like when Russell and I will do the sessions and we'll talk is, you know, number one, like, you know, top assumption about markets, general assumption is markets are too long, right? And we can visualize kind of, that with our macro trend in our daily, especially, you'll kind of see like, a much larger area of green macro than red macro. And, subsequently, like that change back from our red to green kind of, you know, essentially weakens. Like we had an area on the, I think it was like 5,400 area on SPX, like, which like I can post the chart in a little bit, like a pretty clear, break above, flip, kind of like what we look for in terms of like, I guess, bounding up long. Not to say that there isn't like potential for it, but it's not something to bet the farm on every time. Like what we experienced in February and kind of got ahead of a perfect storm was a very unique set of conditions that is extremely difficult to replicate in especially our current conditions. We had, in our OMM regime, like we had maybe 2 days of like the ceiling collapse regime, which is like required to kind of leg us down, day over day and suppress like, a like a larger time frame reversion. And that ended with the positive exposure of the ceiling we saw the other day. It flipped back to the hedge prevalent. And so, kind of like, another big picture is that you don't necessarily want to be concerning yourself with, like ultimate macro possibilities and trying to trade that exclusively. What we can do kind of with the, daily IV and composite regime gives us a pretty reliable indication of like where the market's heading. And so what you end up doing is if you actually trade that religiously rather than, your macro market, you'll end up getting the direction of the macro and you'll understand kind of how like, you know, each day builds up a microstructure into what we end up seeing over the course of weeks to months. So, and we kind of also had like several like predefined areas where, if this resistance fails, like it's, continues to be like the, you know, underlying assumption that the market is too long. The reality as well is that, um, at least this is kind of like a personal opinion. A lot of this reversion long, right, on the macro side of our indices has been essentially like a reignition of what we like would say like the hyper concentration, especially like into Nvidia, Magnificence, and just generally your top 100 stocks, which make up like 85% of all U.S. equity, the OEX. Um, so something to consider as well, like if, in a new bull market, we'd likely see continuation of that. So it's, especially like the way kind of, you could say politically, like being lifted up, like Nvidia is being lifted up by the Trump administration in a lot of ways, kind of almost working together rather than, the corporate fighting the political side. So that's kind of a consideration. And what we've been seeing really on the NASDAQ composite as well is a pretty simple view. You can see like almost on what users showing here, our flip back to green daily macro coinciding with that pivot, move above pivot is a pretty standard, you know, solid long sequence to be expected. So it's kind of like don't necessarily let, the potentials cloud like your day-to-day trading and stuff. Especially, we also know that there's actually like kind of less expected value in trading way out in time as well. And so we end up, if you want to say, what can I, how can I make the most bang for my buck? Ends up being mostly, day-to-day trading and occasionally like they're underpriced, you know, long-term setups like Russell's 180 call on Nvidia, which, could play out. Um, so that's kind of like, I guess, my view, because I did get that question from other people, like, what, like, are you constantly, trading a macro view? And I'm saying it's, in my opinion, it's kind of better to focus on, your day to day, your small time frame, which ends up kind of building your larger time frame structure. Hopefully that helps out. That Costco looks really good for a big upswing move on that Wave 7 daily, like very similar kind of set like that fractal trend line set up to your Nvidia Wave 20 daily, Russell.
And Russell was kind of speaking on this earlier with Costco, like how the Fed, FOMC, they're always a month behind because they have to use previous month's data to do the dot plot and then wait to make a decision on it. Costco is way more sensitive to inflation. So when we look at like companies like Costco that are more currently in line with inflation, it kind of helps us also like be in line with expectations of inflation. Like, is it less than, more than, what are their margins at, what are the revenues at? And we can kind of start to like see that more and more in the current situation. It's not an absolute science, but it's a more current factor than FOMC until they eventually change their standards. Like another thing that I'm kind of looking at in semi near future is, the Fed revising their mandates of inflation expectations. Like currently, it's at 2%, 2% year over year, mandate. At some point in time, how long can you go missing your mandate? 2 years, 3 years, 5 years, 10 years, until you have to revise your expectations. So at some point in time, I expect the Fed to revise their expectations from 2% to maybe 2.5%, or possibly 3%, but I'm going to speculate more on the 2.5%. I think that's going to change eventually, but that's speculation. So we'll have more of these here in the near future. And then again, we can do those any time of during the week, any day of the week. Moki kind of polled, and it looked like Mondays and Fridays were the most preferable. I mean, we had 9 for Mondays, 6 for Fridays, and a couple in between. So, if most of you are like, hey, I can hop on Monday, or hey, I can hop on Friday, like, hop on. Be like, hey, I'm going to host. We can schedule it. We can hop on, go over everything. We want to do more of these, to continue to, expand the knowledge, expand setups, your guys' knowledge, user viability, whatever benefits you guys. So just let us know how we can benefit you guys and what your interests are. And then also, we look forward to having, more users present. If you are trading a certain way, have a certain system, like user presented tonight, looking at the closing values, that's a beautiful strategy. Like if we have more and more of that, we can absolutely have more of these events and try to capitalize on that. And then Big Guns in chat said, may try to hop on here in the AM one of these days in order to ameliorate some of these confusions with the IV walls overnight, derivation, sort of like live derivation. So he's pretty good on specifics on those IV walls. Every equity kind of has their quirks, right? Every IV wall is specific. So, kind of knowing those nuances helps a lot. And if he wants to go over some of these nights, that's a perfect utilization of this channel. So feel free to hop on, ask these questions. Any topics or concerns, let us know.
Thanks again. Is that going to be a wrap?
It sounds like
It's
it.
late. I'm East Coast. I got to go to bed.
I'm East Coast too, so.
Okay. Like you never sleep. We know.
Our work is never done.
Well, good luck, everybody, tomorrow. Yeah, on the
Good
floor.
luck.
Thank you.
Well, thank all of you guys for joining us. And we appreciate all of you. So I look forward to seeing you around some more. And have a good evening. Take care.